I'm Jess Ross, partner in Apax's Operational Excellence practice. I sat down with our co-CEOs, Andrew Sillitoe and Mitch Truwit, to find out what it really takes to back great businesses, why private equity gets a bad rap, and what AI is genuinely changing right now.
Thanks, Andrew and Mitch, for joining me today. Usually when we get together, I would say there's a deal on the table or a decision to be made. Today, it's just cameras and questions, which might be a little bit scarier. But really, it's a conversation just to get to know you guys and get to know Apax. Andrew, can you please introduce yourself?
I joined the firm in '98, so I've been in the London office the whole time. Used to work in our tech sector and then have been running the firm together with Mitch for the last 12 years or so.
I've been here since 2006, and prior to that I was an operator with some large online companies, and actually had the benefit of being owned by 4 different private equity firms, so I've sat on both sides.
Yeah, so Mitch has the much more unusual background, right, of actually having had a proper job running big businesses.
Well, and I skipped all the training stuff.
What do people get wrong about private equity, in your opinion?
I think people have, often the stereotype that they're financial engineers and that it's, high doses of leverage is what, makes the clock tick. And I think the reality is, and I think this is true for Apax and it's true for a lot of firms, which is we're just trying to build bigger, better businesses that have more impact, that are better run, that are more desirable to end buyers. And that often involves a lot of investing in growth.
So let's talk about what it's actually like to work here at Apax, a little bit about the culture.
No, I think it's the idea of being collaborative, right? I think the culture is very collaborative. There are some firms that have a much more of an eat what you kill type of culture and incentive model, and ours is really one of our values is we succeed as one global team. Sort of the old cliche, but bad news needs to travel quickly. I think again based on the culture of collaboration and succeeding as one global team. If there's a problem, which we're in the risk-taking business, there will be problems. Things don't go in a straight line, but flagging that early so that we can get on top of it together. I think the worst thing that anybody can do here is sort of hide it for a period of time and hope that it gets better.
We like to debate and we like to have sort of the obligation to dissent, so an old McKinsey concept, and that everybody's opinion matters.
Now let's talk about what the teams actually do and how we pick the companies we back. Mitch, so we invest in 3 sectors. Why these 3 sectors?
Look, they're faster than normal GDP growth, right? They're fast-growing sectors. They have really strong attributes when that they're quite often sort of capital intensity is quite often low, and so it's sort of a high return on invested capital. They have a lot of recurrence, so whether that's in software or marketplaces or so forth, it tends to be the north of 70% of the revenue is recurring. That creates predictability and stability. And they're in spaces where we're really in subsectors within those sectors. We've developed playbooks over and over where we're doing repeat investing, and that's where we can generate deals. We can manufacture deals where we are putting things together or carving something out. We've done 40 plus carve-outs here. We're looking for something that isn't the finished article, but that's in a great space that we can then take to be that finished article. And the first thing that tends to matter is neighborhood.
Andrew, I guess what has to be true for a company to be an Apax style winner?
Yeah, so in terms of describing our investment style, we use the expression uncovering the hidden gems, and really that the notion behind that is seeking to buy businesses where the underlying asset quality is high, but where the businesses aren't the finished article. So where we can have real impact on those businesses during the ownership period of the funds. And I think one of the key questions that we're asking ourselves in the investment committee, because oftentimes we're looking at businesses which aren't performing as well as their peers, or may not have some metrics which are as strong as their peer companies. And so the key question for us is that for idiosyncratic reasons that we can really help the management team sort of drive change and improve? Or is it something fundamental with the business that means that the business quality isn't sufficiently high enough for the funds to invest?
What is debated most in investment committee?
AI. And I'm grateful for the fact that we were early on the curve on being concerned about it. How well moated is the business against that? Is it a beneficiary of AI? How would it be a beneficiary? What investment is required? Are we buying it for the right price up against the risk?
What changes once a company becomes private equity owned?
So I think there's a few different dimensions of this. I think the first is the relationship with your owners becomes a lot more intimate. I think the second is just the time horizon. And so, those early meetings, board meetings from the formal settings, but sort of review meetings outside of the board meetings are really focused on getting the right building blocks in place for the next 5-6 years. And I think the final thing related to that is really you're having an eye on the exit, right? Who is going to buy this business, and having the clarity around that topic. Obviously, the law is uncertain, so there's always could be some course corrections along the way. But having a real hypothesis at the beginning about where is the business going to end up and how are we going to make it as attractive as possible for that eventual buyer.
Mitch, and as you mentioned, you've been on the other side as a CEO. What do you think management teams underestimate most about the change in becoming private equity owned?
Yeah, I think that when you're running a company, you're sort of dealt the cards that you're dealt, right? Which is you're just trying to figure out how to, take share, take advantage of your USP, figure out how to increase your TAM. And I think when you are owned by a private equity firm, the first thing they tend to do is ask more philosophical questions about, is this the right space for us to be in, or where might be more value maximizing? Are we using capital efficiently? Should we be more aggressive about M&A? Are you top grading your people? There's other stuff, it's more of a learning curve for private equity, where to say, private equity, everything's sort of an option. Well, maybe we should do that, maybe we should do that. Well, the one important thing to be a great operator is to pick the few things you're going to do and do those few things. And so it's a good sort of peanut butter and chocolate combination, because I think the strengths that private equity brings to a deal are really valuable and challenging to the management team, and the management team focusing the company and not sort of entertaining every folly or every question or whatever else is a part of the equation.
I guess speaking of the operational excellence team, what do they do that a great deal team can't? What do they kind of bring to the table that deal teams might not?
Well, for a start, I think that the vast majority of the team has worked and run businesses and has sort of had functional sort of roles in businesses. So what does that bring? Well, it brings a real sort of unique set of specialist skills. I think it brings a degree of empathy as well for the management teams of a particular company, and the recognition that, back to what Mitch was saying, there's only so many different projects that a management team can successfully run at in parallel.
I think they can de-risk execution. What we really did was design this around functional expertise, so that we went in and said, hey, we need to develop a mobile app that's best of breed to capture this business, whatever else. We could go from being a 5-star to a 5-star in the Apple Store, knowing that Nick Iozzo was on it. Or, we could do a cloud conversion knowing that Leif Olson was on it. Or, knowing that John was on cyber. Or all these different areas where we're capable of, in advance of the deal, knowing we want to achieve something and knowing that we can hand that off to somebody who's going to pick up an oar and row. We focus on the middle market because we can effectuate change in those companies, and because we have the scale of a bigger player to bring the resources into the middle market where necessarily our competition doesn't. So it's a bit of our USP.
To shift gears a little bit, it's impossible to ignore right now. We've talked about it a little bit. We're spending a lot of time on it internally, as you both know, but AI. So let's jump there with a question for you both. Where is AI genuinely changing outcomes today in software and services, and where do you think it's just hype?
So the first thing I think is BI is AI now, and you can see it where we might say, hey, is AR creeping up? And you're able to get into 5 different systems of record and quickly ascertain, when I say quickly, within a day or less, be able to ascertain, here are the trends, here's what's happening, here's a timestamp of it, and here's the accounts you need to be going after or doing whatever. That's happening all over the portfolio, and that's instantaneous. You're also seeing it on several companies that really have adopted it for development. And obviously, we're just not far off a world where the lion's share of development is done this way. I think you're seeing sort of the earlier evolution of sort of business process reimagination, which is, that's the complex part, because it's hard to figure out what requires human intervention, what doesn't. And what's going to be your real differentiation and what gets commoditized, and that's, I still think, more of an ebb and flow.
Yeah, I mean, I think so. Certainly around cost reductions, we're now starting to see real benefits there, as well as in business intelligence, as Mitch was saying. I think the area that I find perhaps most exciting is really embedding AI in the products and services that our companies are offering to their customers, providing competitive differentiation, a competitive advantage to those customers, and we're starting to see some really important proof points around that. Price FX would be a great example. Lexitas in the court reporting area as well, and so I think the opportunity to really help these businesses go on this journey, yes, to save costs, but also to really embrace the revenue opportunities here as well, I think is really exciting.
One thing you're optimistic about for the next decade?
Do you want to go? Okay, you sure?
You're just an optimist by nature.
Yeah,
I've got like 7 things over here.
Yeah. So for me, I think that people today are talking a lot about the downsides of AI in terms of automation and job loss and so forth. I think what this technology is going to help us do in terms of solving some really big problems, both in the healthcare world around sort of the environment and so forth. I think the word transformative is overused, but I think it will be transformative there.
Awesome. Thank you both so much.
Great. Thank you.